So here is Michael Marcus. He's originally from Rhode Island. So back where I'm from, Massachusetts, we'd say Michael Marcus. So he turned 30,000 into 80 million. And here is his philosophy. Good morning. It's Friday, May 29th. I hope you had a really great week, a nice start to your Friday, a nice month of May. We are heading to June. I'm Scott Bennett with the great Mike Olafson of Invest with Rules. We have a really fun topic. We'll cover some rules from a stock market wizard. We'll cover the market. We'll cover our moves. We'll cover your questions and your tickers. To everyone, thank you for being here. Mike, good morning. As I pull up some slides, how are you today, buddy?
Excellent. It's a beautiful Friday here in Philly. Weather is like California perfect, so we'll take it.
Sweet. So here's the agenda. Again, if you want access to these slides, they're always in the members area under market updates. Before we dive in, world's quickest disclosure. This is just information, not a direct solicitation to go buy or sell anything. Please always manage your rules, your process. There's always risk out there, even though we're a stock market score 10 out of 10, and the market is having a really great reaction since the very bottom of March. This is Invest with Rules. Thank you for being a member. This is a great venue to have your question answered, whether you want to jump on with us or put your information in the chat below. We're happy to answer and address things. Or hello@investwithrules.com. We try to answer as much as we can. And if you're like, this is incredible, but I'm maybe not doing as well as I should be doing, just reach out to us. We care. We want you to do well. That's a separate entity where we do advice. We know your situation intimately. It's hello@iwradvisors.com. We do this strategy, which is called the Trend Roadmap strategy. We do additional strategies like our all stock fast lane strategy. We have our tax sensitive strategy that's a little bit longer term. But let's bring us to the stock market wizard. We'll cover some rules from some very dynamic investors, whether they're trading stocks, commodities, currencies. It's all the same. It's a moving item that they're doing. So here is Michael Marcus. Mike, did that one run through to your recent books, or have you run into Michael Marcus recently?
Yep, definitely. And plus in other venues as well. Definitely write articles about him and so forth. Yeah.
He's originally from Rhode Island. So back where I'm from, Massachusetts, we'd say Michael Marcus. So he turned 30,000 into 80 million trading futures and currencies. And here is his philosophy. We'll go over this together. I think it's interesting because the rules overlap. So he is a market wizard. He was featured by Jack Schwager. He was a trend follower. I hope that rings true to what we do. He had macro awareness, which is what I would dare say we do. This is the one thing that we're not totally over our skis in, but you can if it fits you, is aggressive sizing when right, ruthless risk control when wrong. And here are the rules and principles he's best known for. So we're going to run through 5 of the keys. There's probably more. I'll start with the first one and we'll pause. So trade with the trend. I hope that sounds eerily familiar to what we do. He strongly preferred markets already moving, momentum environments, strong directional setups. He avoided forcing trades in choppy ranges, which is hard for everybody. It's the only environment where everyone loses typically, besides a down market. And he's very aligned with modern trend following systems. Mike, any comments on rule number 1, follow the trend?
Yeah, I think it aligns perfectly to what we do. Yeah.
Yeah, we'll fly through. So, cutting losses fast. You'll see this with us we share our trailing stops, we share the number. That's when a gas goes to a coast, and then we are kind of assessing the very next day to see is it still below our stop. So Marcus believed this was the single most important rule, cutting losses fast. Do not let a small loss turn into a large loss. So the key to trading success is emotional discipline. He would exit quickly if the market proved him wrong rather than hope of a trade recovering. Small losses are manageable. Large losses destroy confidence and capital. I think this is so true. And now, if you're busy and you're, as we were talking to someone yesterday, they're golfing throughout most days or playing pickleball or they're having a ton of fun, put a hard stop in. If it hits it, it hits it. That way, it's like insurance. If you're around and you want to do more alerts, or if you want to do conditional orders, or you just want to look at it at the end of the day or start of the next day, whatever fits your schedule, but never letting a small loss turn into a horribly large loss. I'll move to the next one because it's so related. Risk management first. Even though he was aggressive when he was right, survival came first. You have to stay in the game. That meant avoid catastrophic drawdowns, preserving emotional capital, which is something we don't talk about too often, but it's how we feel when we're playing the game because this is an emotional roller coaster. And it's kind of interesting. And he said, never risk ruin. And he was renowned for having kind of, I think probably after he'd made his big money, but in general, having like you've saved your whole life and having 5% positions like what we do, there's some still risk there. There's still a lot of upside there. But there's sometimes you'll see people on the internet or different services where they'll put like 25, 50, 100% in one ticker. That sounds amazing until you know one day it's going to have an earnings reaction gap down. And can you really stomach that horrible day and how you're going to feel? So, Mike, I'll turn back to you. Risk management first, or I'll pivot back to cutting losses fast. Any comments before we go to learning from your mistakes?
Well, first off, this ties so nicely into last week's conversation about trade stats, and it allows you to basically track this so that you could make sure your losses are small and make sure you're letting your winners run, etc. So I think it's really a kind of a nice compliment to that. But the other thing, I guess my other comment, Scott, is that emotional capital piece. You're absolutely right. We touch on trading psychology. I'd say probably, I don't know, probably every other show or so forth. But it really is so key where whether it's monetary capital or emotional capital, that confidence level you have or lack thereof, it's just so key. Where with the risk management, it allows you to essentially preserve both. And I don't know about you all, but yeah, I'm older and I've worked hard over the years to build up a certain amount of worth, and it would be devastating to me to lose a lot of it, a big chunk of it. And so that monetary capital piece goes hand in hand with emotional capital. And I know that in times in the past, in the recent past, the past few years, whatever, I've had a significant drawdown. It does start to wear on me. I'm human. It even though I'm following my process and feel good about that, it still is taxing. So, but anyway, I think it's a piece that we will continue to talk about because it's so important.
You know, it's interesting. I was on a flight last weekend and I had a few podcasts to go and the internet was shoddy. So I was listening to Best Loser Wins by Tom Hogard. I was listening to a few chapters, and he was talking about his dear friend who was one of the most successful traders that he was friendly with, and he stayed bearish for too long. And not only did he stay bearish, he was bearish and leveraged, and he got called. So he was so bearish with his such a large position that he actually faced ruin. And if you think about kind of how we feel today, it's hard to even know what's happening in the Middle East day to day. It seems like it's like negotiation, non-negotiation, negotiation, non-negotiation. But the price movement of the stocks since the low of, we'll call it March 30th, has been up. And we'll look at that chart in a minute. And you can listen to so much TV or podcast or whatever to have you have that confirmation bias that you're right, stay bearish. But that couldn't be further from the reality of this market. This market was another violent rip back higher. And sometimes risk management is actually getting back in
Yeah.
and being in the game because and then if not here we have to learn from your losses or learn from your mistakes because that was his challenge as he was like this market's still going to fall and sometimes it just doesn't. So learn from your
Oh,
mistakes without emotional spirals. He studied losses carefully. Um, didn't obsess, freeze, or self-destruct. He was looking for feedback loops, reviews, adapt, move on. And again, I think this really comes back to knowing your stats, knowing your trades, knowing what's working. You don't have to don't ever put your account numbers in, don't ever put specifics in to AI, but you can put in your trades and it will give you some analysis of what you're doing really well and what you could be working on. So it's kind of interesting how AI is getting so knowledgeable on improvement beyond what you're currently seeing yourself. Mike, how are you feeling about learning from your mistakes?
yeah. So, and there's a great quote tying into everything you're saying, Scott. I forget who this should be attributed to, but the quote is, "It's okay to be wrong. It's not okay to stay wrong." And that's exactly the point. Like we showed last week with some basic trading stats that you could be wrong 60% of the time and right only 40% and still make a good amount of money. So, but that's the key. It's, when you're wrong, admit it, accept it, be comfortable with it, move on, but don't stay wrong, which is, I think, the Achilles heel of so many of us.
Yeah. And yeah, I think that's a really good point. And there some stocks will come back and they will reward you for your patience. But the
Sure.
question
Yeah.
is opportunity cost.
Yeah.
So, confidence matters. So, he believed that traders needed conviction to size correctly, not arrogance, conviction based on preparation, experience, and pattern recognition. And that's kind of trend roadmap E. He said many traders fail because they trade too small when right and too large when emotional or when wrong. And I know we talked to one. I think I would call him a prospect, and he had a humongous position in Microsoft, and having it fall 30% destroyed this poor guy's confidence. I wasn't thinking straight, just was like, oh my goodness. And there's a million reasons of why it's Microsoft will likely recover, and there's a million reasons why maybe if their relationship with OpenAI got worse, then maybe it wouldn't. But it's like, is it worth it to have that 30% drawdown destroy your mental capacity, probably bled over into his rest of his life? Because I definitely saw it. So I think that was the main ones. So there's a million more rules, and we'll cover more market wizards. But anything else on final wrap up on confidence, managing risk, trading with the trend, don't fight it. Any other comments, Mike?
Yeah, the only other comment I'll make is I think this hopefully this resonates with a lot of us. And I think the Market Wizards books, it's not like there are just these huge secrets in there, like, oh, that's how Michael Marcus trades exactly. No, those aren't necessarily revealed. But what's great about the books is seeing the mindset and methods of other great traders and absorbing those. And it's kind of like, reading about great sports stories if you're an athlete. So I strongly recommend that if you haven't already, check those books out. They're on Audible. You could get them on Kindle, whatever, and just kind of peruse them. And I think you'll find a lot of good nuggets in there.
Yeah, that's awesome. We're going to pivot to the market. So the S&P 500, IVV. So we'll go back to the low. Here is the 30, I think that's the 30th. I think it's the 31st. That's the 30th. 31st, that was your absolute low on March 30th. Down red arrow on a break signal, super short-term break signal, but you had a coast before that. We can look at TradingView in a minute. This is just a screenshot. You had a coast signal with confirmation green upward arrows, which tells you there's a higher probability the market goes higher. You had your gap up. If you're using, let's say, Investors Business Daily or other sources, that's your follow through. That was your gas signal. You got a little early indication from us, and you've had multiple days to shake whatever you're thinking in your head and get in. And that's what we do. And that's how we're kind of super grateful to be doing this for a day job. So thank you for that opportunity in the newsletter and a day job in the advisory service because a lot of people, it's really hard to click the buttons when it's really important to do so. And then you had these overheat signals indicating RSI, relative strength index, over 68. And you got another one of these confirmation that the market could likely go higher. and it paused for a second, and then you got more confirmation. You got the scary red arrows, four of them, saying that there's a chance you consolidate or pull back, and that left the building after 4 days. You went right back on overheat, and today you actually have more confirmation that this market is ripping people's heads off that are short. And those that are not in are saying, I gotta get in. And maybe it's a blow off top. Maybe a blow off top is coming months from now. Maybe it's a little kind of a bull flag thing. The answer is no one knows. The answer is you're above the 21-day EMA, you're above the 50-day simple, you're above the 200-day, you're in an uptrend on multiple time frames. Mike, what say you on the S&P 500?
No, I think you said it well. So let's just keep charging on.
Why don't you go for it on the dash, on the market help tab?
Great. So this is our market health tab. Everybody's got this available in the member portal on Google Sheets. The top four gauges sum up everything going on. Stock market scored a 10. It's been on a 10 since it went back to a 10 last, I believe, Tuesday or Wednesday. So it's over a week now, back on a 10. Our percent invested now is just about 100%, 99.5. Our beta ticked up a wee bit with the past couple of days moves. So we're a bit over the S&P, kind of how we move relative to the S&P. And that's an estimate. All these are estimates, of course. And then finally, portfolio heat. It's kind of ticked up, definitely. It's in that yellow-orange range, heading towards red. That's kind of when our spidey sense starts to tingle. It's okay right now, but that's basically if all of our stops got hit over the next couple of few trading days, estimate of how much our portfolio would lose. And we like it kind of in that, let's call it 5-ish% or lower range. So we'll definitely keep an eye on that. Scott, you want to go ahead and take the strength gauge and
Yeah, so mega caps are back in favor. So the Nasdaq 100 is off to the right, ranked number one. The S&P, these are overheated, so this is a market that is hot. It could pull in at some point. Internationals moving to the right, small caps moving to the right. Even though we added a new position in small caps, relatively down slightly to flatten the position. Discretionary moving, healthcare moving, materials are moving. What's getting kind of pulled back significantly? You have consumer staples, which is probably healthy for the market. Energy, big move to the left, so weakening over the past 2 weeks, very healthy for the market. And then Bitcoin can't get out of its own way on a break signal. Anything on what it stands out to you on the mega caps?
I think it aligns with what we're seeing in the sector gauge. You've got Apple continuing to do its thing. Lilly has had a great run. Microsoft, you brought up Microsoft, and it's on a U-turn and definitely has been coming up. But yeah, I think that if you go to the left side, weakness, Berkshire is still down there, financials like JP Morgan Chase. So any other things you see?
Yeah, I would say the laggards. This is healthy. This is rotation.
Yeah.
That's
Yeah.
what I see. I see tech that hasn't done well is coming back, like software, like the CLOU, that cloud software, which is Microsoft and its friends. Financials, which has been left out in the cold, is finally coming back. Meta's on kind of a struggle bus, but then you have some of the big banks in the Berkshires of the world. They're struggling because they're just so heavily in cash. JP Morgan, I think a lot of people are thinking to themselves, like, okay, well, how is Jane Street so profitable with so few people? And then JP Morgan is this conglomerate monster. So that is on a break signal. So it's an interesting time. But I would say globally, when you look at this, your eyes see green, and that's a very positive sign for the market. If we look at since we've been in existence, all of our trade logs, all of our performance is tracked. This has been a sound year. We aren't taking extraordinary risk. Obviously, if one wanted to take more risk, you could probably be beating us. If one is the S&P 500, we're well above it, so we're happy with that, obviously. A 60-40 mix, which is where most of our clients are being recommended by large advisors. So we're having a much better year than that, which is really nice to see. But overall, it has been, since we've made the kind of unconstrained moves, it's almost been a year. where we don't have to be in just large caps or just sectors or just anything. We pivot, and this is more of a short-term trend following model. So far, so good. Mike, why don't you hit the weekly market wrap?
Scott, if you don't mind, just go back one slide and just comment briefly on, we talk about the fact that we're beating the S&P, which is great, no doubt about it, but that's really not our bogey. Could you talk a little bit more about that? Not to put you on the spot, but I think it's important to talk about that. We're not out here day to day trying to beat the S&P 500.
If we were, we would take more risk because we could handle more drawdown. But most
Yeah,
of our clientele
exactly.
at the very top, you'll see our max drawdown since inception of our newsletter is 12.6% drawdown compared to almost call it double that. And if you're more aggressive, it's probably way more than that. If you think about Kathy Wood and crew at the ARC funds, I'm sure it's like, I don't know, what is it, 50, 60% drawdown? So from the 2021 highs. So our clients, in my mind, after talking to them for my old clients, our IWR advisors clients, our newsletter members, this is how I would describe them. They want strong risk-adjusted returns, but also by minimizing large drawdowns so you can live a great life with less market stress. So if you think about those lanes of the highway, this sometimes I refer to lanes like you're switching funds at the wrong time. This is about how much volatility are you willing to accept? Me personally, you as listening to this, how much volatility are you willing to accept? And the answer for me personally is when the market is very strong, a 10 out of 10 short-term uptrend, long-term uptrend, I can accept a lot of volatility. This is the time to do so. You're in the left lane, you're driving fast, we're having fun, we're making great money. But when the market is having horrid days, think back to February, think back to tariffs, think back to 2022, think back to COVID, think back to 2008. I am not personally willing to accept that level of volatility at that moment. And I used to work at a very, very large financial institution that had several trillion dollars under management, they would say, "What's your risk tolerance on a scale of 1 to 10?" And everyone says something like between 6 and 8. And when the market's awful, you go to 5 or 6. And when the market's great, you're like, maybe I'm a 9." And what on earth does that mean? And the answer is it doesn't mean much because it doesn't really change the algorithm much. But when we say we're a 10, we're 100% in stocks taking on more beta than the market. And when the market score back in February was more like a 5 or a 6, we're in the right-hand lane of the highway. We have one wheel in the breakdown lane because the last thing we want to do is to wipe out huge gains that we've experienced. So I'll pause there. That's my opinion.
No, that's great. I appreciate you doing that because I just thought it was important because we have been bringing up the S&P, and I just wanted to level set on what we mean when we talk about it. But anyway, I appreciate that. Let's go ahead. We've got some tickers to look at and a question so far. So I'll kind of breeze through the weekly update, and then hey, anything else you want to, Scott, and then we'll go to questions and tickers. Make
Love it.
sense?
Yep.
Okay. So we talked about where the market score has been. So moving on to the major asset classes. This is our simplified version that we implemented, I think it was last week or the week before. SPY's having a good week, and year to date now is over 10%. International is having a better week, and year to date beating the SPY. Commodities taking on the chin this week, down 3.5%, but still year to date, super strong market year to date. Gold, despite what the chart looks like, is having actually a decent week, coming back a little bit. Year to date, okay. Trailing 12 months, fabulous. Bonds, I think it's worthy to note where bonds are so relatively, let's call it non-volatile, that being up 0.7% this week, I think is worthy of note. Year to date, almost flat. Bitcoin, like Scott mentioned, taking on the chin and year to date down substantially. We so far having a really good week and year to date 16.6. And then last comment on the bottom part of the chart, we've talked about that over the past several weeks, kind of what that's all about. But if you have any questions about that, on what we're doing there, it's just kind of a summary of performance. It's another way to look at what we looked at in the last slide. in terms of how we're doing drawdown and that reward risk ratio, which we think is important to look at. So any questions about that, jump in the chat or email us. And then to recap what we did, actions we took that we took in the market this week. We ditched, unfortunately, our oil pipeline ETF AMLP. That was yesterday. Today was the agricultural commodity ETF PDBA. That was today. And we've opened up positions, taking a more risk with Pink, the one of the healthcare ETFs, Jabal Circuits. I think I hope I pronounced that right. Jabal. I think that is right. Right.
Maybe Jable, but yeah, sure.
Okay, Jabal. And then we, like Scott mentioned, took on small caps and today ATI. And we could talk about, in fact, let's take a look at a chart of ATI in a second here, and we'll talk a little bit about that. And then trim positions. Important to note that yesterday we trimmed two positions. STX, which is our, gut check me here, Scott, our fourth trim into strength of STX, right?
Hmm.
And UFO, the space ETF. And by the way, we got a question from Art on the SpaceX IPO. We'll get to that in a few minutes. But we trimmed that. And both of these trims were because of extension beyond our estimated trailing stop loss, 15% or greater. And the position, like in the case of UFO, it was now growing to be over 6% of our portfolio. So we trimmed it back to 5. Just like we did STX, trimmed it back to 5.
Yeah, and
Anything you'd add or comment? Yeah, go ahead, Scott. Yeah.
I would add that trimming is not easy because we are innately trend followers
Yep.
and we're trying to manage risk is what we're trying to do. And when you trim, sometimes you feel like, oh my goodness, how did I do that? It keeps going higher, like STX, which is now up like 80% since April. And UFO space is down pretty sizably today. So yet trimming yesterday makes us look pretty decent. And I just think that we're just managing risk. That's what we're trying to accomplish.
But I think it's important to note, so to compare and contrast, in our fast lane strategy, which is made up of entirely billion-dollar fund manager stocks, we do not trim. So STX is growing. So we let the positions grow, but we're taking on more risk by doing that. So that's the compare and contrast to trend roadmap versus say a fast line.
I don't want to get too deep into the weeds. We can do that on another show, but do you know offhand how much Fastlane it's up this year and then versus also the volatility or the drawdown that it took?
Yeah, it's right now, I'm going off of memory here. It's up about 19.5% for year to date. So a bit better than the trend roadmap. But it was more volatile. So the drawdown at one point it was down about 13%. And by the way, that's peak to trough. That's not negative 13%. That's from peak to trough. So it actually surpassed our drawdown of the past, what, 4 years because it's taken on volatility.
Yeah, and I think that's just good to know. Let me just get back to my slides here. Um, again, that's taking our billion-dollar fund manager stock rank, and how we have a little bit of finesse to it, but we are so if I go over here to the hub and I go over here to billion-dollar fund manager rank, we're using a slightly different set of rules, but we are using these tickers, and we're using more performance strength versus relative strength index. Anything else you'd add on that?
Yeah, in fact, I'm just taking a look to see if I am correct in I just was estimating drawdown on fast lane. No, I think I was wrong on the 13%, but it did take a significant drawdown back in the when the market was bottoming, it was in drawdown mode. Then it quickly got reinvested and pulled back out. So the drawdown looks to be out to do the calculation, but about 10%.
Okay, so there you go. So again, everything's a little subject to future. We don't know the future. We just do our best and we follow our process with an extraordinary amount of discipline.
Yeah.
And which is great because that kind of relates to what we do, which is kind of a good theme across managing risk and managing the psyche of your trading. We'll cover a whole bunch more things. Let's open it to some questions, some tickers, whatever we can do to be supportive. We don't know the future, but we've back tested life multiple times over, so maybe we can be helpful.
Oh, actually, let's take a look at the ATI. Did we take a look at the ATI chart? Just our ad today?
Let's do it. So I'm going to go ATI. So this is a materials play, alloys, like metals in the aerospace, defense, energy, medical. Today's your breakout. So it happened to be at the top of our watch list, which is designed so that this is exactly what we're looking for. We're looking for breakouts. So whether you want to draw it here or you want to go maybe a little bit higher, I'd probably do something like that. So today's your green arrow of confidence. You're on a gas signal, and it had a special run. And there's a lot of times that after you've had a really special run, you get these. Look at that red line. So RSI over 88. I mean, this thing was cooking. It went from the gas signal was at 70 and you had a double, and now you've had a nice consolidation from March, April, May, and now you have your breakout. So anything else on ATI, the artist formerly known as Allegheny?
No, no, I think you covered it. If there are any questions, certainly jump in and let us know. All right, let's get to the fun stuff now. Okay. So Art asks, wondering what you guys think about buying the SpaceX IPO. I'm gonna let you handle this one, Scott.
Well, it's hard. It Here's what I probably think will happen, and I'm probably wrong, but let me just give my guess. It's going to be oversubscribed. If you're not in now, you're probably not going to get a good fill. It's going to jump on IPO day and then it will pull back and it will give you a chance. All IPOs do. Almost every single IPO gives you multiple chances to get in. Why are they going public? They're probably raising an exorbitant amount of money. And there's a lot of people who've been in SpaceX funds, personal people, employees for years that have had zero liquidity, and they finally are going to be able to buy a second home or pay off their debts or whatever is on their plate. So most of the time, this is not the rush out and go buy it scenario. How have we played? Based on our process, we've played it through UFO, which is up like 30% on the short-term trend. And we've sold into strength yesterday, which so far that timing looks to be pretty pristine. Other things we've talked about in the past, this is a ETF that did nothing for a very long time. It's like a 2.5% management fee ETF. It rocketed up. This owns pre-IPO stuff. I'm not saying go buy it, but here was your gas signal. And then it went red line and it's pretty volatile because it owns like SpaceX and Anthropic and there's a couple other space stocks that own equity stakes in SpaceX. So me personally, I'm curious to see once we get a few quarters, are the billion-dollar funds, some of them actually own this privately in their funds and some of them don't. But I'm curious to see what they do. I'm curious to see how scary the end of the lockup might look like. So this is a red arrow down. That's not positive. We got an extension sell on UFO. That's not positive. So I'm afraid that it could come out and bag hold a lot of people who buy on day one.
All right. And I guess the last comment I'll make about this before we move on. So the other thing, Art, in your question is that the major indexes, for example, S&P is trying to get, in fact, I don't know if it's finalized yet, but trying to essentially bend the rules to get SpaceX into the S&P 500 earlier than normal. Same thing with the Qs. So, in fact, Scott, have you heard, is that finalized yet?
I don't know the answer, but I think it's going to happen.
Yeah, yeah, I'm guessing it's going to happen. And that personally kind of makes me scratch my head about volatility of these indexes that have already been volatile because of the AI trade. So it should be very interesting to see what happens. I think it's just kind of just we have to be cautious and patient. Charles asks, any chances on getting the TV indicator in Think or Swim? That's a great question. I'm a Thinkorswim user as well, Charles, so I hear you, man. Um, I think getting it in there is going to be a stretch. Never say never, but yeah, we Scott and I have had kind of mixed success in what's called ThinkScript, I believe. Basically, using Thinkorswim, their scripting service to kind of script in indicators. So, yeah, we're not going to promise it, Charles, but we'll put it on our development list and we will try to do it. Just no promises.
Yeah, and I think we like that TradingView. There's you can use a free account, so there's no barriers.
Yeah.
So, um, so yeah, so that's the hard part, but we'll definitely look into it. So here is so at the very top, you go to Start Here, Rules and Tools. And then down here, you'll see the trading view indicator, get your trading view indicator. And then step one, step two, it's on your chart. How fun. And then I also added a walkthrough guide. What on earth did the symbols mean? And then how do you actually customize your watch list? So you can grab our list and just, I show you how to slap it into TradingView. So, like we had someone we talked to yesterday only trades ETFs, which is totally cool. So you can put whatever ETFs you want, whether it's on the watch list or in the entire ETF rank, and throw it in there. And then you can kind of rip through the charts pretty quickly.
Yep, yep. And as a quick update on TradingView, we've mentioned the past couple of few episodes about I'm jokingly calling them the Scotty boxes or the Darvis boxes, basically that box out the most recent green arrow, for example, and then red arrow or vice versa. And we've got the first version of that back. It's not ready for prime time yet. So we still have to work on it, but hopefully we can get it into a position where it can be published and give you the option to see those boxes. That might be helpful.
Yeah, I think that's, and the goal is like just to make it help you take the right action is what the hope is.
Yep, yep. But I think if you haven't seen us go back a couple episodes, you'll see that Scott had some mock-ups of the boxes. Yeah, in fact, yeah, doing it right now.
So it would look something like that.
Exactly. And what is that showing? It's basically showing, okay, there was the first green arrow confirmation, and there is where it ended, and the first red arrow, that check engine light kicked in. And so the desire or the goal here is to provide the ability to say, okay, kind of like a Darvis box, if anybody's familiar with Nicholas Darvis, kind of same type of theory.
Yeah, so the hope is it would look something, again, where it's far from perfect, but it would look something like this. So then your chart eye doesn't need to be too, like you're like, oh, just stay in the green box is kind of the premise.
Yeah, yeah, exactly. Okay, great. Thanks, Charles. All right, let's get to some tickers. So going back to Jack's, first one, IBM.
IBM. Nice day for IBM. So it's a really nice day for these like I'm gonna call them value tech like Dell and IBM. But so this one peaked back in November of 2025, went coast on a red arrow. Went coast, 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 break. Tried to see some daylight and daylight and failed. And then we'll draw a fun little trend line. That's what it's trying to do for you. So if it were me, I would say be if you're in it, I would say it's now a hold. If you're not in it, I would be patient. My expectation is it will consolidate on top of the 200-day simple moving average. You had your U-turn, big gap up today, up 9.5% today. And my expectation is it consolidates and then goes higher. That's my expectation. Mike, any thoughts?
Yeah, I think you nailed it. Okay, excellent. Next one, QQQM. And I think, let's see, memory serves, isn't this?
It's like a cheaper, it's a lower cost version of the QQQ.
Yeah, okay, yeah.
But there's some nuances to it. So overheat. So this is an example of a be patient. I think we went into SPMO in this case. But gas signal on an overheat, be patient. Um, and that would be my story. If you own it, hold. If you don't, I'd say be patient. The most pristine time would have been on the 8th, and you had a couple chances to load up. You know what's one ticker Mike showed me that I thought was really interesting is QQQA,
There you
which we
go.
can get
Yep.
back to. This is it's like it's not necessarily the NASDAQ 100. It's like the NASDAQ 100 with momentum.
Yep.
So it's like, what is it, Mike? Like 20 tickers that are like crazy looking that where they, I mean, this is telling you you're late to the game here, but it exponentially went up more. Um, so let's say on March 8th, you didn't get the warning until the 10th, but it still went up like 34%. And then if you go back to the QQQM, you would have got your gas signal 21. So it's kind of like they have all these ETFs are pretty cool. That's why we track it. And that's why we have processes in place to review ETFs and new ones and different ones. And Mike, any thoughts on the QM?
Yeah, I think QQQM is a good alternative to QQQ, but also in the momentum at the S&P 500 version SPMO that we're in and QQQA that Scott just pulled up. We really like those ETFs, but you do have to be careful because they're only, let's call it rebalancing or restacking the deck. I believe it's once every 6 months. And so if there's a violent rotation, those things could kind of get violently rotated themselves and hit, in fact, you saw in QQQA a bit more volatility, significantly more volatility than the regular Q. So just be careful with those if you do them.
Yeah.
Okay.
Um, there you go.
Any, yeah, excellent. All right, next ticker is, sorry, CVX.
Chevron. This is a tough one. So it depends where your basis is. So for me, this is concerning. You are making lower highs. You are my thinking based upon the chart is you're on a co-signal, so short term is down, long term is still up. You have an enormous amount of red warning shots. You haven't had a turn in a really long time. My assumption is this is a trim, or at the very least, when it breaks this support to trim. Could it hit here and then give you one more bounce up higher and kind of lift back up to 192, 195? I think that's possible. Is this a flag? I don't think so. Um, but I think you probably maybe get something like it's probably going to have really good earnings. I mean, think about how high the price of oil is relative to recent. So could you get one more dunk, undercut this, and then rally? I think that's probably more likely given the evidence on the screen.
Yeah. Yeah, it's we've got a thesis, as do a lot of folks, about energy prices and energy stocks and ETFs, but ultimately you got to follow the price action. And I think you're spot on that if you've been in this since that late 2025 gas signal or even before that, definitely manage your risk. If you're not in it, then probably hold tight until it sets up a bit better. All
Yeah,
right.
and I mean, it would. I would assume there's a chance that it comes back down here.
Yeah.
Um, but maybe you probably get a bounce before that happens, and then I guess we'll see. We'll have an earnings report from there, but the earnings are quite positive. So you'd think it would hold up better, but there's this profit taking that's been happening.
Yep. Excellent. Thanks, Jack. Jim's got IGV.
Software, Mike, why don't you hit this one? So we have CLOU, but what do you think about this one? Today is day one of a gas signal.
Yeah, so the software space has just been decimated. The whole thesis was that AI was going to torch companies like ServiceNow and Salesforce, et cetera. But I guess they said, "Hey, let's show them." And so this is a classic case where a U-turn can be super helpful. Where with the latest U-turn, you could have started nibbling on this space if your thesis was different and then enjoyed a nice little ride up until this confirming gas signal. So it looks like to me that this might be forming a massive cup, and we're in the right side of the cup. But what say you, Scott?
Yeah, so this is sometimes where your thesis needs to change. So when you got this undercut on April 10th and then the rally on the 13th, to me, that's where you should probably lean forward. And then your opportune time, if you really thought there's a chance that the rotation could happen, you got a bunch of, I mean, look at me, you have 20 t chances to get in on a U-turn for a small position, like a small ad. And this is likely where once it settles down on the 200 day, this is where one could then kind of add more.
Yeah.
Um,
Oh yeah. Sorry. Go ahead.
yeah, go for it. And then here's what we're in, which just look constructively better.
Yep. But here's an interesting situation. In fact, you could leave this one up where if you do tend to, kind of look at U-turns and try to get in early, this is a classic case where it's okay to be wrong, but just be wrong small. Just keep your losses small. Where you had a couple of like in this case with CLOU, you had what two U-turns where you would have taken small paper cuts, been wrong, keep your loss small before the third one actually works. And that's the gist of those trading stats is that it's okay to be wrong, keep your losses small, and then when you're right, let it run and hopefully be right big.
Yeah, and then here's where your I don't deserve any credit. Let's say your Bennett box. It just here it is. I mean, it just this is the one that worked. So this is the one where you add. You haven't had a reversal yet, and you're finally on overheat. So this is probably where it soon pauses, is what my guess would be.
Yep. Excellent. All right. So there you go, Jim. Chris has got CRM in the software space. There you go.
Yeah, I think this is a billion-dollar fund manager stock. Is that correct?
I believe so. I'll double check here.
Let's go find out. So,
Yeah, there you go. Yeah.
boop a doop, Hub, billion-dollar fund manager rank, search CRM. Maybe not. I could have sworn it was. Is that right or wrong?
Oh, I'll go to the
Okay.
actual feed.
I see it at 92 on a
I got it. Yeah, there you
U-turn.
go.
Break to U-turn today, up 9%. So yeah, this is your day to say something's different here. You started getting the green arrows of fun started at the end of April, and I think today is your day. I know it's a big volume day. A couple of tickers that stood out to me. So Chris, I think this is your small ad today. And why couldn't it run to the 200 day? And that's some pretty good eating right there. Could it kind of break out and consolidate before running higher? People aren't going to get rid of a full suite of Salesforce. Where are you going to go? I mean, AI is not ready for that yet. So, and then another one that was on the I was looking at today, which is breaking out, was Palantir. Again, this is where we hope these tools help you to try to. These are likely small ads. Any other thoughts on Salesforce?
No, I think you nailed it. In fact, I'll tell you what. So thank you, Chris, for that one. Let's go to a couple of questions, and we'll go right back to tickers. In fact, John's got MRVL queued up. But before we go to MRVL, let's hit some questions here, Scott. So Rick asks, does it bother you that the market seems to be overreacting to things? There was an article yesterday that said the Trump administration was considering more drone development, and the drone companies all jumped 10 to 30%. Seems like a hyperactive market. Yeah, Rick, great point. Scott, you got some thoughts on that, or?
I saw this, Mike. This is a new ETF relative that came out at the end of last year. So apparently there's now an ETF for drones. Mike, you go first. This seems more up your alley.
Yeah, Rick, you're spot on. This is not an easy market. It hasn't been. In fact, I would argue that you go back to the tariff time frames over a year ago now, and it hasn't been easy since then. And the volatility, I'm not sure. I'm sure there are plenty of articles and studies out there about the volatility in the market having increased. But yeah, you're absolutely right. You're right when you say it, Rick, that these types of things, the administration says they're going to invest in some of these kind of blue chip software companies. Boom, they rocket up. or there's a mention of Dell or whatever the case may be, or in this case, drones. And so what keeps us grounded is highly liquid names, billion-dollar fund manager names, good solid ETF list, and following our rules. And yes, are we going to get victim to some of that volatility? Absolutely. But the alternative is to sit in the sidelines and miss opportunities, especially when the market's a 10 out of 10. So that's kind of my thoughts. Scott, anything you'd add?
Well, you see that it actually just, as we were looking, it just went from gas to overheat as we're talking. And this is a great example of a just follow the price, follow the trend. And I think there's a million like I think one of the we're doing things that I would say is very fair. We do not have any inside information. If we did, that'd be too easy because you would know that the war was starting and you would have bought
Yeah,
ITA
yeah,
down here and you would have made a fortune. And then once the war started, it was the worst investment ever. So there's an awful amount of leaked information, and that's where we live in. And whether you like it or you hate it, it's just the reality of life. And I think, um, despite how we feel, I forget what that name of that ticker one was, but they're coming back. And if they're not coming back, then maybe, I mean, I think of it kind of like our small cap trade we took like 2 days ago. It's like our risk was 4%. Can whether we're right, wrong, or there's a news article or there's a political view, can we handle the 4% risk on 5% of our portfolio? For me, personally, for my family, the answer is yes.
yep, yep, definitely. You know, I looked at the clock. I realized we're almost at the hour mark already. And so we got several other tickers to get to. We're going to do a marathon round of tickers, but John asks a great question I just want to get to. And then we're gonna flip out the tickers. If you got to jump at the hour mark, thank you for joining us. I'm sure you could tell Scott and I love talking about the markets. We sometimes get carried away with these conversations, and we're already at the hour mark. But thank you for joining us. If you have to drop, if you can stay with us, we're going to hit some more tickers. So buckle up. The question John has is just to check with you guys for the buy criteria you use as a confirmation, the first green arrow, or you wait for two consecutive ones. For example, when would you enter IGV? So if you could go back, or maybe even better, yeah, let's talk about IGV. That's probably a good one. So John, just to be clear, in fact, go ahead, Sky, if you want to answer it, or if you want me to.
Well, we're trying to find confirmed trends.
Yeah,
So IGV wouldn't qualify until and it wouldn't qualify today because it's overheated and it's on a gas. Uh,
correct.
Sorry, it's overheated and um, it's been on a U-turn. So what we're trying to find is short-term and long-term uptrends on our watch list. So it's again back to Michael Marcus. Michael Marcus is he's looking for trends that are sometimes are already confirmed because things go way higher than you think they should. So in this case, we would take it on if we had capital available and CLOU was at the top of our watch list, we would take it on this day. If the capital wasn't available and it was here, we'd take it on this day. As long as it's at the top of our watch list, there's just a higher probability that this breaks out. And we don't know, but the green arrows, more probability. The relative strength index is improving into itself, more probability. And we're just trying our hardest to play our edge. And our edge is even more increased when you're on a gas signal versus a U-turn signal. Mike, you add anything?
Yeah, so to use this example, John, so the first opportunity that we had to add CLOU was on, if you could flip over to it, right? Yeah, almost there, right there. That's the first opportunity.
That's when we took it.
Because exactly. Because that's the first opportunity where it's not an overheat and we have the green arrow of confirmation. Because if you go back to the previous green arrows, it was on overheat, and we're following our process to not buy on overheats. Now, anybody, any trader, investor can do differently, and you can buy on overheats. That's totally cool. But just whatever you do, just stick to your process and follow it. But to be clear, John, just to answer the question, it's just one day of a green arrow, not an overheat. So a gas signal, green arrow, not an overheat. We're there.
Yeah. Um, yeah, I think that's a really, really good question. I totally get
Yeah,
it.
definitely, definitely.
Great, great. This is our process that we really believe in because not only do we believe in it, but it's back tested and we're doing okay.
Yep.
Marvell is it depends on your cost basis. If you're buying down here, it's a hold. If you're over here, maybe it's a trim because you're probably extended from your stop loss. Marvell's the one that I think we were over here on the 30th, I think. And this day, I'm still mad at myself for this. We always review, look, just like Michael Marcus, we review what we do right and what we do wrong. There's a couple tickers this year that we've self-analyzed more than comfortable, but this was a leader. We got shaken out, and lessons learned, and we will get as everyone, we will try to get better.
Yeah. Okay. Yeah, no, appreciate that honesty as well. All right, next one is from Paul CLS.
Yeah, Celestica is funny because Celestica had this like really interesting. I mean, this has been a workhorse. And then it consolidated to the 200 day, and then it broke out. Apparently, we talked about this one in the past. And then you're on a gas signal, and this was a really great run. And then it gave half of it back, which is kind of normal, but not normal in a super bullish market. So clearly, people are rotating out of this. And you had some red arrows show up, and the red arrows are gone. So my guesstimate. This is a be on alert, be patient. I think you're probably going to get a green upward arrow pretty soon. And my assumption is you sat down right on support, which is logical. Maybe if you want to draw it a little lower, I think you go higher. If one wanted a small add and then add again on confirmation, I think this probably goes higher.
Yep. Excellent. Next is Broadcom.
Yeah, good breakout day today. I was looking at this one. So in a world where everything's run, gas signal, we don't have the confirmation yet, but you had it back over here on the 7th, so the day before the market. That's a tell. Um, yeah, your earnings are coming up really soon, so it's like I think it's next week. I think it goes higher.
Yep.
So today would be, if it were me, I'd probably wait until earnings unless you had capital, but small, and then after earnings, if the market is assuming the funds like this stock, they've liked it for a long, 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 long time. I think it keeps running.
Yep. Definitely. All right. Thank you, Paul. Next is CrowdStrike from Ying.
Crowd, why don't you do crowd?
What a beautiful, I think we've looked at this one recently. But what a beautiful breakout back in the early May timeframe. And the only pause has been, and it stayed on. Look at this. Interestingly enough, you had 3 days of the latest gas signal of that green confirmation arrow. Then it went to overheat, and it's literally stayed on overheat since. That's how strong the action has been. The overheat being RSI over 68. And now you've got another renewed after a pause. You've got another renewed green arrow, but it's still on overheat. So Yang, I would say if you're in this one, manage your risk. Let it run, maybe trim perhaps if your process dictates. But if you're not in it, I'd be patient because this overheat, and this kind of shows that an overheat can stay overheated. Like an engine could be overheated and continue to drive for quite many miles before it finally peters out.
I would add one thing. I was talking to someone who became a newsletter member, and this was at the top of the watch list, and they were concerned about the market being extended. And said, this isn't. Um, and it's honestly up 50% since it was at the top of our watch list. I really wish we had capital available. I would have loved to have had this.
Yeah.
It's sad, but we've had a decent run in a few of these, but this was right on our radar.
Yep. Excellent. Oh, and Ying says yeah, definitely done some training. Great, great. All right, awesome. All right, Charles also comments CrowdStrike earnings.
Yeah, they're coming. Yeah, sorry, I missed that. Next week.
Yep, excellent. All right, so then going back to other tickers, we just have a few more to cover, then we'll wrap it up. Next one is from Jeff UMAC, UMAC. Oh, I'm sorry. I missed one more from Ying. Now, service now.
Yeah, that's the same. It's actually not extended. That's surprising.
Yeah.
Um, yeah. I would say a small ad. I'd likely gets fills all the gap here from January. Likely gets up to the 200-day before pausing, like it's done several times before.
Yep.
Um, Service now is a ticker in our CLOU ETF cloud.
And that's the interesting thing. When you got a powerhouse, a juggernaut like ServiceNow in the software space, that's still in a U-turn that could potentially have a lot more to go. That just shows you that maybe the overall software sector has got a lot further to go.
Yeah, and unusual machines. That's a fun, unusual name. Um, so I would assume critical metals. What is this, Mike? I don't really. I'm just. So you had a gap up yesterday on an overheat. You had a few chances if you're watching this one. So earnings were likely, I don't know, surprising. So the market liked it. You got your gas signal on the 15th, then you had your pullback, gas signal on the 22nd, 26th, 27th, and then whammo, something happened. Um, Big agreement. I think all the defense stocks, I assume this is another drone maker maybe, because that's the friends that it's with. And it's sitting right on top of support it leapt over. Is this any other highs, or is this the super high? Um, yeah, I think it consolidates. So be patient. I think it consolidates, and I think it goes higher. That's a kind of an undercut of the gap up day, and you're right back at the top. So I think it just keeps climbing from here.
Yeah, someday we'll do a deep dive on overhead resistance, but basically, even going back many months and I guess years, everybody who owns UMAC at this point is in blue sky. It's all new money, or in other words, you've got all-time highs, so you're not battling against people who might be trying to exit with their break evens type of thing. All right, Jeff's also got FSLR for solar.
Yeah, we own TAN, so we know where you're coming from. You had chances. It would be now either a hold, depending upon cost basis, or maybe soon to possibly be a trim for us. That's how well it's done. So gas signal, a whole bunch of chances down here, a couple chances over here, held above the 200 and bounced. Solar does shockingly well during the Trump administration round one, and it's doing well again in round two. So you're now up and over this support area. I think if we go to a weekly chart, there's a chance. So you're getting actually back up to your 2008 highs. And I think if you break up and out, as the great Dr. Wish would say, that's a green line breakout. So I think it goes, today would be patient and pause. Consolidation would be ads.
Yep, excellent. All right, that is it. That was our last ticker. Thank you, Jeff, for those two. And that does it, Scott.
Cool. Well, again, we'll pause there. Thank you for being a member. Thank you for watching. We greatly appreciate you. You allow us to do things that obviously you can kind of tell we nerd out and we love. So thank you. If we can be helpful to you in any capacity, we care about you. So we'd love you to do well. Enjoy your Friday. Enjoy your weekend. Get out there. Hopefully this helps save you time so you can do the things you love with the people you deeply care about. Thank you again. Enjoy your weekend. Talk soon. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.